Good morning and welcome to the Killik & Co market update. Over the last couple of months, we've seen quite a big rotation in global markets as investors have moved out of companies that have done really well in lockdown and into companies that could do well once the economy starts to open again. For example, we've seen quite a big move out of technology and into sectors such as travel. However, over the last couple of weeks, we've had reports about a potential third wave of the coronavirus. There's been talk of another lockdown in Germany. There's been talk about vaccine shortages, and also there's been disputes about who gets to have the vaccines that have been produced. And all of this has led to a slight reversal in this so-called reopening trade. And we've got a couple of examples here. Here's the share price chart for IAG, which owns British Airways. Over the last few months, investors have been piling into the stock in anticipation of a very strong summer season for this year. However, over the last couple of weeks, a couple of government ministers have very publicly said that they think it's too soon to be booking holidays for this summer, and that has led to a slight sell-off in these particular shares. The oil price is also a good example. Here's the share price chart for Brent crude over the last year. Oil is predominantly used for transport and for powering factories, so as the economy starts to reopen, it makes sense to expect a rise in demand for oil. And over the last few months, we have seen a rise in the price of oil in anticipation of that. However, over the last couple of weeks, as we've had these concerns about vaccine shortages, we have seen a sell-off in oil, as you can quite clearly see on this chart. So this perhaps implies that the economy will not be reopening quite as soon as some people might previously have hoped. One of the biggest headlines this week has been the blockage of the Suez Canal. It's been blocked by a 400-metre-long container ship that's got stuck sideways. The Suez Canal is one of the most important trading routes in the world. About 12% of global trade passes through the canal each year, and about 19,000 ships pass through it every year. Now that the canal has been blocked, ships are having to reroute around the southern tip of Africa. That's adding up to 2 weeks to their journeys, along with hundreds of thousands of dollars worth of additional fuel costs. If the canal remains blocked for an extended period of time, we could see a sustained rise in shipping costs, and those costs could be passed on to businesses and consumers. Here's the Baltic Dry Index over the last 5 years. The Baltic Dry Index shows the cost of shipping dry bulk goods, including commodities such as steel. You can see it as a very volatile index indeed, and that's because it's very difficult to build these massive container ships. So if there is a spike in demand, you can't build a new ship quickly, so instead it means that the prices of shipping are likely to spike. What you can see here is that there was a big drop in shipping prices around the time of the start of the pandemic because there was such a slowdown in global trade. However, since then, global trade and shipping prices have recovered very sharply, and that's largely thanks to China, which has been importing lots of commodities to fund its infrastructure splurge. As you can see, even before the Suez Canal got blocked, shipping prices were at very high levels, so further increases as a result of this blockage could be quite problematic indeed. Deliveroo has published its prospectus ahead of its IPO, and it has also offered shares directly to its customers through a platform called Primary Bid. Here at Killik, we're not able to advise on the IPO itself, but it would be possible for anyone buying shares through Primary Bid to have those shares delivered to their Killik account if they wanted to. What's been interesting this week is that a number of large institutional investors, such as Legal & General, have said they won't be investing in the Deliveroo IPO because they don't agree with how the company treats its drivers. So this is a great example of how important ethical investing is becoming. Moving on to have a look at next week, it's incredibly quiet in the run-up to Easter, and we haven't got any major companies of interest reporting next week. However, we would like to let you know that we are recording a video on Thursday next week instead of Friday, ahead of the Easter weekend. So enjoy this weekend, and we'll see you next week.